What's up, everybody? Welcome back to another video. Um, Today we're going to be covering, I'm going to do something a little bit new, and I kind of took it upon myself to name it. It's kind of corny, but I'm going to name it Rise Roundtable. Figured it was fitting, and basically what this series, I plan to make multiple of them, but what this Roundtable series is going to be is just sort of me going over some macro news, some macro data, some important things that will um, have an effect on the overall market, and then while looking at and explaining and giving my thesis on the major indices like the S&P, the Nasdaq, etc. So starting off, I just want to start by covering the Fed, the FOMC meeting that happened early this week. So, because that's where we left off, and so the result of that, for those who don't keep up with it, is that the Fed chose to raise rates 50 basis points, which was expected. There were some talks that people were speculating 75 basis points was going to be the hike this time, but it just didn't seem logical at all. If anything, I'm assuming they're going to go 50, 50, 50 for the next three hikes. But anyway, so they raised the rates 50 basis points, which was bullish sentiment, in my opinion, seeing that people were fearing 75. And on top of that, some other pointers is that they did announce that they plan to start QT, quantitative tightening, or also known as shrinking of their balance sheet, supposed to be starting on June 1st. And the rate that they're going to start off at is $47.5 billion a month they'll be offloading, which again is pretty bullish in my opinion, because we were expecting 90 billion off the gate from what I understood, but we're going to start with 47 billion and work our way up until they max it out at 95 billion, which I believe they said they plan to be there by September. So still some time there. And Fed funds range was changed from 7.75% to 1%. The Fed raised their discount rate half a point to 1%. And like I said, the balance sheet runoff will begin on June 1st. And so some more quick data is that their bond runoff will be capped at 30 billion, mortgage bond runoff capped at 17.5 billion, and the treasury bonds will be capped at 60 billion. And they also stated that the Fed swaps showed that there's a chance for less tightening that's priced in after the most recent FOMC meeting. Okay, so now that we're through all of that, we're going to start off with SPY, or the S&P, and obviously if you trade actively every day, you've noticed and have witnessed the wonky action and tough price action that we've been facing the last few days because of multiple factors, and we'll get into that. But so we're going to look at the S&P quick to start off, and one thing that I want to point out on the S&P is that these orange zones here, supply and demand zones, which you will know what those are if you watch my last video where I covered supply and demand, and if you haven't, I highly recommend that you do, because this will make a lot more sense and it'll help you out as well. So this was a 4-hour zone. That's what these orange zones indicate. And so what we can see is that we are constantly rejecting this old 4-hour supply zone. 1, 2, 3, now 4 times. And this used to be a 4-hour demand zone. And this red level here was a key level that we needed to hold. And you can see that we broke below it, and then also broke below it on Friday. And we made a lower low, and then we formed a zone here, and now we're sitting in it and trying to coil back in this 4-hour old demand zone. So it'll be interesting to see what happens Monday. But what I do want to note about this, other than the technical setup, is the heavy action that we were seeing today on 400, puts around 400 or just below. The premiums were wild, as you can see. Total premium here, these are the highest premium trades for the week, all SPY. You can see they're all puts as well. So a lot of people are betting on SPY to pull back to or below 400. Now it's also important to take into account DTE, days till expiration, which means these have 42 days till they expire, so they have 42 days to make this move. But nonetheless, it's important to note that there is heavy bettors betting that SPY will hit 400 or lower. So let's quick recap on the SPY. Next, we are going to go over to crude oil. Now, crude oil is making a strong move here. I had tweeted it out, if you follow me, tweeted out on this daily break. Now we're breaking through this supply zone. Crude's looking really strong. It closed very strong. And now looking at the hourly after this daily break, we're setting up again and grinding through this zone. It's one thing that is important that I came across this set of data is for crude oil is a lot of people are questioning what's the best sector to be in right now if the market's kind of going down. A lot of things are inconsistent. Energy is great, and people are like, well, it's already up 200% this, this last year, year and a half, whatever it is. But it's important to look at some data that we have here, and this is a big set of data that I came across today, which was the U.S. primary consumption of energy. And if you look here, this is a 10-year chart. Here was our previous highs, and now look, we're testing this here. This was like 9.68, I think, or something around there. We're at 9.52. So we're still using tons of energy, and with this Russia-Ukraine situation still ongoing, that's a major catalyst. And as well as going into summer, oil is always hot into summer with everyone traveling and so on. So that's important to note as well. And it, again, like I've mentioned before in one of my videos, crude oil and the S&P and overall markets, they tend to be inverses. Meaning, if crude is going up, the overall market sentiment is going down. Vice versa. Doesn't always have to happen, but that has been very consistent historically. Now we'll move on to the NASDAQ next, which is the story's been the same here for a long time now, just underperforming so heavily. Technology is, it's insane. And NASDAQ got smoked today. It had, the NASDAQ had its first 5-week losing streak since 2012, if that goes to show you just how weak it is. But we're going to look at the daily starting off here, and you can sort of see it's small, but sort of a head and shoulders here. Here's the left shoulder, here's the head, here's the right shoulder. And now we're at a key level. I see we have a strong lower wick here. Don't know how much to believe on that. We'll see Monday. But it regained this key weekly level. That's what this yellow zone is. And now it's in a weekly demand zone, and it needs to hold this zone. The selling pressure here is insane as it just continues to underperform the market, so we'll see what happens, but it needs to bounce here, or else we're going to have a lot further downside. Now we will move over to the S&P 400, which is, for those that don't know, this is the mid-cap index. And one thing I want to know about this is looking at it, this looks not strong, but stronger than the other main indices. And we're running into topping volume here on the daily. This volume has occurred very frequently, but that means we're reaching a bottom, and we're in a good zone here to start bouncing. We could even chart this level here, so not much more downside. So mid-caps look good. I don't know why they're performing the way they are, or why they look stronger than the others, but it's something I'll have to look more into. But just worth noting that mid-caps do look stronger than the overall market as a whole. We'll look at the IWM next. So we just looked at the mid-caps. Now the IWM is small caps. So same story as the NASDAQ. Small caps have just underperformed all year, and they continue to, because with all the uncertainty in the market, it's hard to find true value, especially in cheap companies like these. And so right now, like I said, the yellow levels are weekly levels, so we're sitting on a key weekly level here. So that this is a big test for us. So come Monday open, we'll see if we can hold 180. And similar to SPY and the um, similar to SPY and the flow there, same thing goes on the IWM. It's the same picture actually that we're going to look at. And so you can see IWM here, 7 million premium for 172 put. Another IWM 178 put, 172 put. Big premiums here. So a lot of people are still betting on more downside to small caps, but they are on a key weekly level here that I'd like to see hold. And those had 40 days till expiration, so there's still time for that move to shake out down to 172 should we see it, because that's where the major bettors were. But like I said, same as NASDAQ, underperformance, but we're on a key level here, so watch the IWM small cap index first thing Monday. Next we'll look at the VIX. Though I'm not sure how many are familiar with this, but the VIX is the volatility index, and similar to crude oil, it is the inverse of the overall market. So looking at the daily here, it's a little, scuffed and broken up, but has somewhat of a daily cup and handle look. Also put in a double bottom today on Friday right here, which is showing more strength on it. But this one's tough because we formed a demand zone here, or I'm sorry, supply zone here. And you can see how hard it rejects both of these times, so it's hard to gauge the sentiment on it right now. But like I said if you watched the last video on supply and demand, here's a great example of supply turning demand, and it pushes higher. And so if you want to be bullish on the overall markets here, what we want to see is either a straight fail here on Monday or a bounce that rejects 34 hard and flushes. And that will turn the overall markets because, like I said, they're inverses. Next, we're going to look at, lastly, the 10-year. And so this is a 10-year bond note, which the 2 and the 10 are most affected by what the Fed's doing right now. So those are the ones you want to pay attention to. If you are on Thinkorswim, it's just \1010y, and you can see the 10-year interest rates. Today we made new highs, 3.15%, which is another reason why the market's taking a downfall, is just because of the rise of interest rates, which is expected, but still. Keep an eye on interest rates because it ultimately has a great deal of effect on the S&P. And a couple other things I want to go over quick. This is just data for you guys that I figured might be helpful. First, we're going to look at the ETFs, or exchange traded funds, the biggest winners and losers on the day, just so you guys can gauge where the money's flowing out of and what's holding strong in a market that's dipping hard. So we can see today that the biggest gainer on the day was the biotech bear index. So a lot of people are betting against the biotech industry, thinking it's going to go down. Same thing for China, and same thing for the Dow. And now the losers here are the largest ETFs. You can see the change on these. But right here, same as I said, biotech bear, biotech bull got smoked. A lot of people are betting against biotech. I'm not sure why, but just a quick look at those. Another thing that I want to note, which I feel is pretty important, is the put to call ratio on equities. So what this means is how many puts per call there is. So right now we're rising, we're making higher lows here, and so this is saying that we're about to make a new high here. This is saying that there's 0.65 puts per call in equities, and this is on the rise, which we don't want to see. We want to see this taking a downturn. But this is just a straight reflection of what the overall market's doing. The put to call ratio is on the rise and the market's falling because a lot of people are worried and don't know what's really going on because they don't keep up with the Fed and all kinds of other outside information. And then 2 more things that I want to share is ETF flow by category. This is very beneficial. Take a screenshot quick if you want. I do post these things on my Twitter. If you want to follow me, I'll have it linked in the bio. But this is as of April 29th. These are the ETF flows by category. So you can see the highest outflows were equities, which is just normal stocks. And of those equities, large caps took the biggest hit, which a good reasoning for that was probably because of earnings. There's a lot of big earnings in blue chip companies right at the beginning of the year. There was a lot of disappointing earnings, which is a reflection of this most likely. Um, and then, you can just see totals down here, but equities, a lot of money's flowing out of them. Nowhere near as much that was put in from January to April, but still worth noting that significant amounts of money is flowing out of equities as a whole right now. And then lastly, this is ETF outflows by just the single ETFs rather than sector. So the biggest outflows are happening in, what do you know, S&P 500 fund, S&P 500, S&P 500, S&P 500. So the three main outflows are happening on the S&P, not really a shocker. So a lot of people are worried here. And again, you can see down the line if we want to go further, QQQ, this is the NASDAQ index. Yield corporate bonds, I'm not sure why those are falling. Those should be stable or on the rise with raising of rates. Large caps taking a hit. Russell 2000, this is small caps. And like if you look at the bottom, the lowest outflows are happening in a lot of bond indexes because rates are rising and interest rates are going to be on the rise, therefore causing higher movement on the bond yields, the 2 and the 10-year specifically. So I know that was a lot of things quick, and this is a long video again, I apologize. So there's a lot of talk on whether or not we're in a recession or going into one, so after this I'm going to look to try and put together a video of if we do get into a recession, kind of some ideas how to trade and what kind of plays to look for with some examples and why of good recession proof, they call them, stocks for you to watch and keep on your radar in case we do in fact tip into a recession. But as always, if you have any questions, feel free to leave them in the comments. I appreciate you guys watching, and like I said, I'll make that video on recession stocks. I'm going to try and get it together tonight and have it up within the next day or two most likely. So thank you guys as always, and I'll catch you guys soon.